right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Monday, April 3rd, 2023. Thanks so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. Just a quick heads up, the market is closed on Friday for Good Friday. So we do have non-farm payroll report coming out. I'll be tweeting throughout the day. If you guys want to follow me on Twitter, it's at GAR Capital. It is verified with a blue check mark, so you know it's us. So again, it is a short week. So again, we want to be very careful. We're going to kind of try to trade this market this week, not really push anything. We're going to treat it like it's a Christmas holiday, Thanksgiving holiday, if you guys remember those short weeks and how tough it is. So, we're going to be extra careful, kind of focus on, base hits, going to focus on high quality setups and move forward that way. Just also another bit of housekeeping news. I will be traveling to Colombia on Friday to visit some family. We'll be returning to do the morning note on Tuesday. So next Monday, I will not have a video up for morning note. Just want to give you a heads up. But I will be back Tuesday morning, ready to get back to work to rock and roll. All right, let's go and get over it. Dow futures up 111 points. Most of that is going to be probably energy companies and value companies. So let's see exactly what is up pre-market. Yep, it's mostly energy. Energy pre-market, I'm going to go over a couple of names. XOM, we talked about that with that OPEC headline on Instagram. XOM is up 3.89% pre-market. CVX up 4% pre-market. All the energy companies are up this morning due to the OPEC cuts. So again, energy is going to catch a bid as energy prices are up. Look at crude oil this morning, up 5.83%, while gasoline futures are up about 3% on that production cut. Also, United Health, one of my favorite companies, UNH, was given a top 10 idea by Bank of America for the quarter number 2. So again, that is up 3.17%. And that's what you get with the Dow. The Dow being up 0.33% or about 110 points this morning. S&P is rather flat, 0.110 if anything, 41.33 currently. Nasdaq futures are down 0.65%. Probably the majority of that is going to be Tesla this morning. They reported deliveries over the weekend. They did beat so far, and I did a video on that on YouTube. If you guys want to check it out, I recapped the quarter and I did some preview of the week. So again, we talked about Tesla. I do have a runner on it, but we took the profits on Friday for this very reason, because over the weekend we have no control. And again, in a short week, we want to make sure that we're doing the right thing. We took Apple, Meta, and Tesla right before we closed on Friday, and it was a good idea because we can see the Nasdaq's down. Apple down slightly, about 60 cents this morning, but around about 0.44% on Apple. Tesla's down about 2.9% this morning. So I'm looking at Tesla again. I still have a same target of around 208. Let's go ahead and go to the daily rather quickly. I talked about this last night. You could see that 201.47 is our number now. So again, we're right above this target here of 199.59. And the reason I put that is because that was the level I had for the breakout. So if anything, we're probably just retesting the breakout. And what does that mean? Now we can target 210.81 again. So again, let's see how Tesla maneuvers today, this morning, and see if we can probably catch that 210 level for calls, if anything. The only issue is that the last time we tried this was Bank of America last week. Now, granted, the market was shifting more bullish than anything else. We'd be riding the wave of the seasonally strong April, especially the first week. So we'd be probably going into that move to the upside. If we continue, we'll probably catch it. If anything, what we could do is actually be a little more prudent, and we can buy next week's expiries too. It may cost us a little bit, but it'll give us some time where we don't get hit on time decay or theta. So I'm going to keep an eye on Tesla today. That's going to be number 1 on my list. Let's see if it holds above 199.59. That was the breakout level that we had. Quick initial support after that would be right around 197.85. That's your 50 MA on the 1 hour. Let's go ahead and go around the horn. Gold, I put a chart up yesterday on Twitter. Gold being $2,000, almost a triple top now, kind of a double top now on the weekly. So if you are long gold, probably not a bad place to take some profits here because it absolutely has soared. Remember, we were talking about that weekly level around that 200 MA for a while. We sliced that. That's the same MA the weekly MA that the S&P held up in October. So you can see that we consolidated right around 1673. I said once we break above the 200-day, if you want to go back to the YouTube channel, you could possibly go long on gold if you want to buy gold coins. GLD does not trade very well. It's not my favorite thing to trade. But again, you probably wrote this up as well. But again, you can see that $2,000 level, really big resistance. So again, if you're holding some GLD calls, GLD longs, maybe you have a GLD position, maybe write some upside calls against it if that's what you want to do. Maybe take some profits here. I'm all about that. If you guys need to take profits right around that 2,000 level, again, we may break out, sure, and if anything, profits is profits. But again, maybe hitting our head a little bit here on gold. I also posted an article regarding silver and gold correlation from the Bloomberg terminal. Feel free to read that one. It was an interesting one that silver has a little more to catch up to get for gold, and the expectation from the writer from Bloomberg was that silver will start outperforming. So maybe we get a weaker dollar moving forward, kind of our thesis of 2023, lower yields, lower dollar, lower inflation, right? Well, if the dollar does continue to go down, then that should give gold a little more room to run higher, but may give silver a little more room as well, since that is a little bit more high beta in terms of gold being the baseline. Copper futures down about 0.32%. Again, very correlated to the S&P in terms of growth. Euro dollar 108.68. That's up about 23 pips this morning, 25 pips this morning. Again, that's pretty closely correlated to the S&P as well. If the euro goes up, dollar yen 28 pips to the upside, 133.09. Pound dollar is up about 52 pips. Bitcoin, not much going on this weekend in terms of Bitcoin, 28,365. We're still waiting for that 30,000 level, and the next gap fill on the contracts for futures is 35,000. So let's see if we can sustain and break 30,000. Once we do it, then it gets interesting, that 30,000 level. That's where you want to start putting up your stops. If that's the case, if you're trying to trade it, maybe keep it at that 25, 27,000 level, kind of where we are now, 28, and let 30,000 just be that push higher if we get a little higher. But we need the dollar to go down, and we're going to chart that here in a second. Ethereum down about 1.71% on the contracts, 18.15. Let's go to the dollar, and we'll go into some macro. Okay, I'm going to go up higher here. Let's go to the dollar, down about 0.11% this morning. As we know, oil is up because of that OPEC cut. I have read about the BRIC nations, again, the nations of China, India, Russia, Saudi Arabia, and I think there's one more country, I may be wrong. But they're trying to create their own, I can't say create their own currency, but create their own economic system, very similar to the G7 in that regard. But again, they want to kind of keep it where oil will be the driving force of that currency. So again, kind of to go against the dollar. Again, the idea of the petrodollar. And again, I'm not one for conspiracies. I know there's tons on the internet. But again, if you were asking my take in terms of what could this mean? I mean, historically speaking, as a student of history, I love reading about history. This isn't the first time that nations have kind of moved together, either economically or politically, against the United States. And how many times has the dollar reserve status been in question? Guys, we had an oil crisis in the 70s as well. We were coming out of Vietnam. The United States ran up a lot of debt. Nixon put in price controls, took us off the gold standard, which was pretty big. Again, that led to the printing frenzy. But it still held as reserve status. So again, what's difficult about that BRIC nations agreement is that it's really set on really one commodity, gold. Oil. Now, the United States used to be backed by gold, but now they're just backed by the full faith and credit of the United States government, or the military power, if you want to say, to defend the currency. But again, oil being so volatile, again, it's too easy to financially manipulate, because if you have just a currency pegged by one thing, again, we saw this with Tether. For example, when that tanked, again, what would happen if, every car in the United States became EV? Demand goes down, right? But the prices remain the same. So again, prices would fall as demand wanes if supply was continuing. So it's kind of this point where they use the spigot, obviously, of supply to control the prices. It's very similar to the Fed raising rates to lower the money supply, demand being all equal in the equation. My point is that the commodity itself of oil is very volatile, and it's very sensitive, if not exposed to manipulation, because the SPR could be drained and flood the market full of oil. The United States could enable some legislation where we just throw out all environmental regulations that we have currently and pretty much drill anywhere the hell we feel like it because we consider it a national security issue. That would change the game and then nuke that currency. So my point is I wouldn't put too much emphasis on the BRIC nation stuff and the oil stuff, the petrodollar, because as of right now, we have had a time just about 4 years ago, three or 4 years ago, where oil futures were negative, if you guys remember that. And again, that just shows how volatile oil can be. Now, the dollar in comparison is less volatile. And this is the dollar index in comparison to the other nations' currencies. I believe it's the G8 currencies. So the level we're looking for here is 101.62. And that's the key level we're looking for as support. That was last April's, mind you, last April's low. Remember we talked about it constantly in the last session. We were talking about the August highs, right? That 3,400 level on, 4,300 level on S&P. That's kind of that analog that we're looking for if we break above 4,200. Well, the dollar has been kind of leading the way for equities. Again, if the price of stocks, meaning the dollar itself, lowers in value, by definition, demand staying the same, stock prices will go up. It's not a one-for-one correlation, but it's a pretty good barometer because you could see the October lows is where we had the highs in the dollar. If we break 102 and stay below that, 100 is going to come next, and that's where we start trading, start testing those August highs. If the dollar continues to fall, gold will be affected. Gold will go higher. Keep in mind, crude will go higher as well now that they're cutting back production. If our production in the United States does not increase, or we keep it the same, or our demand decreases, or what have you, the formula could change. You're going to expect higher prices at the pump. Just so you know, the dollar affects everything. So again, if the dollar breaks 102, your portfolio may be green, but you're going to be paying more at the pump. So again, just kind of prepare yourself for the summer if this is the case moving forward. So again, DXY is definitely firmly on our radar. If we can get below 102, that would be April level of S&P, which is a lot higher than where we are now. So again, the dollar kind of leading the way. You know, we know the lows are in for October. We've been saying that now for months. We'll see what we get in terms of that. Let's go to the VIX. Volatility index, again, rather flat, kind of holding on to that 18.5 level of support. We are now at 1957 in terms of the weekly. Again, no real trend change. You could see that we're probably basing here. So again, the question is, do we retest 18? Maybe we get to 4,200 this week. Again, really depends on what the expectations are. Really, the issue here in terms of the VIX, I think a lot of this has to do with oil and not really much with equities, because you could see, yes, the Nasdaq's down. Most of that is Tesla and the mega caps, which soared last week. But the S&P is rather flat. So I'm not putting too much emphasis or concern into the VIX at this moment, but it is getting rather cheap. So again, what you want to do is that we know that in April it's relatively strong, but you're not going to get a straight shot to 4,300, 4,400. So again, once you start hitting that 18 level, start taking a look at some insurance for your portfolio for any kind of major swings. We don't have a Fed this month, but we do have a CPI and a PPI number this month. We also have bank earnings this week. So again, the paradigm starts shifting now. What's important? Is it inflation? Well, we had bank crisis. Do we care about that anymore? How about earnings? How about valuations? Now we need to see these earnings justify this stock move in Q1. Very, very interesting. Take a look at the daily here on 10-year Treasury yields. We are now testing the 200 MA. We have not been below that since early February and early March. Again, so we've been there. But the problem is here is that, does it hold? And again, we want to break 3.4%. And if we do, the summer may even be more inflationary than we want, meaning higher gas prices. How does that make sense, Carlos? Higher yields and everything. The dollar is starting to lose value, so are yields. Money's becoming easy again. We're going to start seeing easing financial conditions as bonds catch a bid. So really the zone we're looking for here is 3.4% to around 2.8. It'll take a lot to get us below 3%. We need a lot of things to work out right. But again, the point I'm trying to make here is that I could see financial conditions easing, but again, the stock market still needs a little more to catch up. So again, it's still playing early March, pre-bank crisis, pre-Fed liquidity jump, all that jazz. So here's where we are. Let's answer some questions. Any thoughts on NVIDIA? Let's see it. NVIDIA, again, I have a resistance at 289.74. I was talking to Investment Club a couple weeks ago, and I said, listen, NVIDIA has been an absolute monster. But if you want to take some profits here, by all means. The thing is up nearly 90% for the quarter. That's not sustainable, even for NVIDIA. And if it does go higher, fine. Again, I don't know if we're going to hit all-time highs this year. I mean, NVIDIA is such a momentum name. But again, guys, the higher they climb, the faster they fall. So again, if you're looking at a place to maybe take some profit, maybe you want to travel somewhere in the summer, or just leave it alone, that's fine. But again, I would expect at least somewhat of a pullback in the market here, maybe around May, because that's seasonally weak, around 258, maybe below 260. If you can get around 230, maybe it'll give you an opportunity to add some more shares on NVIDIA. But chasing it is difficult. I mean, 289 is your level that you're looking for, 290 as resistance. That's the April highs. How interesting, correlating with the April lows on the dollar. So again, if we get any kind of pullback, maybe we fill this daily gap. I think we have one here around 264. Maybe we get a shot to go ahead and go long again, short term. But again, I have shorted AMD and the semiconductors. They're just running a little too hot too quickly. So it just provides some imbalance opportunities for us. Any idea why Tesla's down even though they had record deliveries? The idea of record deliveries is fine, but I think the issue there was the fact of expectations. I don't know what people expect from Tesla. You know, being a their own car company, not merging with anybody, doesn't even advertise. They are the forefront of EVs, and it gets to the point, the expectations get away from it. I think that the market right now just saw how Tesla ran up on Friday and we caught it. I think that was more of a front-running action of the deliveries, closing out ahead of the deliveries number and then selling the deliveries number itself. Kind of like, the rumor was a record delivery quarter. You get that run up and then they sell the news. Doesn't mean we can't bounce. I have that 199.59 level for support. If we hold that level, then we can use that as a way to play to the upside and still target the same level we were targeting on Friday. Well, again, we may want to buy some time on that, but I'll keep an eye on the market. All right, you're very welcome, Jerome. Thank you again. Guys, thank you so much for joining me this morning. If you haven't already, we're trying to get to 10,000 subs. I think we're like at 8,500 or so. So hit that subscribe button. Would appreciate it very much. I want to get this channel to grow. And hopefully in the future, I get that cool silver plaque that my stepson keeps asking me about. He always says, well, you should get the silver plaque. I'm like, yeah, man, that's 100,000 subscribers. I don't know if we're ever going to get there. But with your help, maybe we get that first step. Appreciate you guys as always. I will catch you guys tomorrow for the morning note. Have a great rest of your Monday. Let's make it a great trading day. Cheers.